So the market is going to open up down today. Trump says that a 25% tariff must be paid by Apple on iPhones not made in the US. And this is something he's been talking about Apple and Tim Cook for a while now. He said apparently, he's been putting Tim Cook on notice. I have long ago informed Tim Cook of Apple that I expect their iPhones that will be sold in the US will be manufactured and built in the US, not India or any place else. And if that's not the case, a tariff of at least 25% must be paid by Apple to the US. So around 7:20 this morning, Trump put out a Truth Social post about that. And this is the result. So we're down about 70 points on the E-mini from when Trump made that Truth Social post. Technically, I don't believe this is exactly a tariff. It is a border adjustment tax. And that is in the case when, and this is, I believe, just theoretical. I don't think this has even been used before. It's when a U.S. company is taxed on what it produces outside of the country and then imports in. So this could be the first of many more border adjustment taxes. And so I don't know, this could be a whole new form of economic power that Trump might use and future presidents might use. So who knows? We could go into another cycle of this border adjustment tax slash tariffs, and then we'll see more chaos in the market like we had a couple months ago. I don't expect that, but it's interesting that we're seeing this new form of this new form of tariff, and that gives the president actually quite a bit of power over U.S. companies, on control over where they make their products. Here are some big tech stocks, especially Apple, right, impacted by the border adjustment tax. Overnight, down about $7 or $8. Since that, all the other big techs down too. Google, Microsoft. Here's Meta's even down. I can see why this is spooky in the market, because this shows that a U.S. president, Trump, would be willing to impose this kind of tax on a U.S. company. So it's a direct cost addition to U.S. companies that the president is willing to impose. So we'll probably see some more of this. I would expect. But we'll also probably see companies get in line. Trump wants to see more manufacturing in the U.S., and he's shown that he has some tools, some mechanisms to get that done. I did read an article that if Apple produced their phones in the U.S., it would cost them about 25% more. So maybe that's why Trump chose the 25% tariff, because he's saying whether you can make it in India and pay the 25% tariff, or you can make it in the U.S. and it'll cost you 25% more. So you might as well make it here and make it locally. So it'll be interesting to see how that goes, and it'll be interesting to get more news out of there and see just how this day goes. So the market, like I said, we're going to open up down today about 70 points. And while we're here, I wanted to talk about something important on yesterday's price action. So here is yesterday. Here's our 5-minute chart yesterday. Let me see. Yesterday we opened at this price right here. This is the 9:30 open. And look at where we closed. We closed basically right at that 9:30 open. What are signs that we might have a late test of the open? Well, let me draw the line on here. So here's the opening price, this white line. One sign that you can tell you're going to have a late test of the open is when there are several tests of the open during the open. So here's our opening price. Market moved down and then came up and tested that opening price, broke above, pulled back, tested it here, broke below, tested again, broke below, tested again, Now it's above and tests it once and twice. Then it gets far away, it comes back and tests it again. It comes right to that opening price and then takes off again. So when you see this in the first half of the day, that increases the chance you'll see something like this at the end of the day. So multiple tests of the open, meaning that the market will likely test the open again at the end of the day, and that can lead to a end of the day sell-off, an end of the day test of the open. So why does this happen? Well, the day was a trading range today, and so one reason it was pulling back is just because that's what trading ranges do. They test both sides. But another way to look at it is that near the end of the day, the bulls were trying to break above these highs through here. And we have this resistance level up here, and it's trying to break above that here, and probably trying to double its range. It's trying to get up to the 5,900, but ultimately it can't. The bulls are not strong enough, and they give up. And that give up near the end of the day, they're not willing to hold into the end of the day. So the bulls are not really all that strong. So they give up. And what's the clear target that's below? It's the open of the day. We see how important it was all throughout the day. And now we're way up here and we're failing to go higher. Good chance all those bulls are going to rush out and it's going to come back and collapse right back to the opening price.